Hello, everyone, and welcome to our latest stream. This stream will be in English as opposed to our past streams that we have, of course, in Spanish, because this time we have a very, very special guest with us. I'm going to introduce him just in a minute. Before, I would like everyone to just say hello, drop a comment, let us know where you're joining from. And to wait for people to just join us. But without further ado, I'm going to introduce our guest today, Dave. Hi, Dave. How are you? Welcome.
Thank you. I'm doing great. Happy to be here. And maybe a year or two for now, we can do another one in Spanish, but it is just not good enough yet. So I'm trying, but
we'll take
I'll
your
get
word
there.
on that. We'll take your word on that and invite you in a year so that we can hear about Etherfuse in Spanish.
Yeah, you at least hear the progress. So
hopefully. So Dave, thanks for being here. I've had the pleasure of meeting you before, and of course getting to know Etherfuse in a couple of different ways. But for those of us, of the people who are joining who don't have the pleasure, why don't you tell us a little bit about yourself? This session will be just for those. Apologies, I forgot to say this. This session is can government bonds really go DeFi? And I'll give you a warm welcome. And we're with David Taylor from Etherfuse, and who's just about to tell us a bit about himself.
Great to meet you. I'm an engineer by background, I focused in security and cryptography for quite a long time. I'd been mostly not business or startup focused, but I worked at Boeing. I did a lot of the PKI infrastructure on planes. I worked at Apple, where I did a lot of the PKI and cryptography for the company as it was growing. After that, I did go back to school thinking I want to start a business sometime, and I met a friend of mine, Isaac Saldana, and we met at school together. And he started this company called SendGrid, which did really well. And so he had a bunch of liquidity because he had an exit event, and we started a startup studio together, which is like an incubator. And we built a few companies, and one of those is a payments company called Neural Payments. And that's where I really learned that the current state of payments and I'd say TradFi is messed up. At least in the United States, it is. In Mexico, you guys actually have a really good payment system. Spain is pretty awesome, but in the United States, it's horrible, and it became very obvious as we try to build on it. And so, as the blockchain started to grow and get bigger, we said this is the future. And so, my background in cryptography and payments and software engineering really led to this moment where we said, "Hey, how do we take advantage of this future where payments is going to be maintained on the blockchain?" And through our experience, we realized that it's really important that we remove barriers between fiat and interest-bearing assets, and more importantly, government debt. And we were both in the United States then, and we said, hey, we can't do this in the US because 4 years ago, the US was very unfriendly to crypto. And we
now
thought to ourselves, yeah. Now it's way different. I'd say it flipped too. So the outcome of that thought process was, hey, we need to go to a place where the incentives are aligned for us to build the future of finance. And so we thought back then, where is financial access low? Where's the cost of credit high? And where is a big economy? And where are there a lot of remittance flows? And so you can probably start to guess why we ended up in Mexico, because Mexico has all those things. We built our own kind of scoring algorithm to determine where to go, and it was China, India, Mexico, and a fourth was Nigeria, but it was way scored way lower. And China and India are very tough for foreigners, but Mexico can be pretty friendly, actually. And so we decided to go to Mexico. So my background is, I'm a software engineer focused in cryptography. And about 4 years ago, we started this company where we said we want to issue interest-bearing sovereign debt and make that available on chain under the interface of like a stablecoin. And can we do that? And so that was our history and how we got started.
Got it. Amazing. Thank you. Thanks for sharing that. It's really interesting how you mentioned that the U.S. probably is changing lanes in terms of how it approaches crypto. Probably and hopefully it will impact how Mexico approaches crypto as well.
Yeah.
And it's really interesting because this is we personally we believe that this is the year to be talking about this sort of thing, right? Like Genius in the US with regulating stablecoins, Micah in European Union regulating stablecoins as well. So probably this is the year, this is the inflection point, at least for other jurisdictions such as Mexico. But this being the year, why don't you tell us a little bit about Etherfuse, just to have a better understanding on how it's built, where it's built, what it does.
So Etherfuse is the outcome of us talking with the CMBV for about 2 years, asking to tokenize assets. And it was a long process. We basically went through the fintech. You're more familiar with this stuff than me, but we approached through the fintech law where we said, hey, this is a new idea. We want to enter the sandbox. And the first year, the response was, we don't think this is a security, which we thought was insane. So we appealed 2 more times. So it is a security. And they wrote back each time, long hundreds of pages saying it's not a security for these reasons, our protocol. Even after that, we've written 2 clarification letters just to get super clear. But the final outcome was that we can issue or tokenize assets and issue them from Mexico. And I would say, it's interesting because it's not according to a law. It's according to just pushing and appealing and then getting enough of a response that we felt comfortable we could move forward. And so what Etherfuse has decided since that point was the main thing missing from the crypto space is the risk-free rate being accessible to the general population. And what that means is the safest assets of every country are hard for the common person to have. And the safest asset is sovereign debt. And so in Mexico, those are CETES. In the US, those are US treasuries. In Brazil, they're LTNs. In Great Britain, they're called gilts. And we saw that no one is really making a huge push into making these things accessible in a trusted way across the world. And this instrument has been critical to the growth of nations in the past. If you look at like the early Middle Ages, the reason they were able to grow is because they used this bond as an interface to invest in themselves. And so we see fiat, we see kind of like equities, we see commodities on chain, but we haven't seen the sovereign debt that we feel is a primitive to banking in that country on chain. So that's what Etherfuse is. Etherfuse is the API or the issuer of sovereign debt on chain, fully collateralized by the shortest, most liquid term debt in that country. And it's issued as a reward-bearing stablecoin that is freely transferable.
Got it. So just to understand here, and probably we'll jump in a couple of legal questions because what you're saying is really interesting, and I personally think that it's really interesting that you guys had to push the authority to make sure that that they were sure of what they were saying. So that's sort of interesting. So if I'm understanding correctly, there's like 2 types of assets. Like one are tokens representing sovereign debt, and there are other assets that are sovereign coins, right?
Yeah. So sovereign coins. So basically, what we tried to show the world was if you can remove barriers from sovereign debt, you can use that like as a Lego piece or a primitive to build anything else. Like that's what everything in the real world is built on. So everything is compared to the risk-free rate. So any credit market has to outcompete that or else it won't exist. Any equity has to outcompete that or it won't exist. And just in crypto, that was missing. So we said, we need to bring this because it's like this critical foundation piece. Now, a sovereign coin was demonstrating that, hey, the world is about 50% managed in the US dollar and 50% in non-US dollars. But nobody has these tools to build these assets. So we showed that using a sovereign coin, you could make a stable coin in any of the currencies that we have. And using a stable bond. So using our token, you could make a Brazilian stablecoin, a British stablecoin, and a Mexican stablecoin. And we proved that point by creating MXNE, which is a Mexican stablecoin that's fully collateralized by our stable bond, which is fully collateralized by CETES. And the idea was to show people that you also could do this. So if you are in Nigeria and you don't have the resources to set up an institutional account, provide liquidity, you could just take our API and our Nigerian debt and you could issue a Nigerian stablecoin and you could go to your community that you have a familiarity with and use that to engage in commerce.
Understood. Before moving forward, Dave, I want folks over here to, I'm inserting here a QR for those of you that are interested in getting to know a bit more about Etherfuse. You can use that QR and it'll take you to Etherfuse website. And just taking advantage that we have Dave here, invite everyone to pose their questions. Like this is an open space. We try this to keep an open space. So use the chat to pose your questions. Hopefully we have time. Either Dave or myself, we can try to shoot responses. And getting back to our conversation, Dave, you sort of hinted at the response of the question that I had next for you, which is you were talking about accessibility, right? So you guys are trying to build a better way, or at least a more efficient way of providing access to these type of assets that are very secure. So what I was going to ask you is that what is broken in the TradFi approach to government bonds? Like, is accessibility the problem, or is there something else that it's broken? And the question, the way I posted it, is like, if it's not broken, why fix it, right?
Yeah.
So just trying to understand where's the broken part here.
I would say what's broken is the financial world isn't evolving quick enough to meet the demands of the future. And so, like, something that's hard, if you look at Mexico, only 2% of individuals own government bonds, which is the safest thing in the world, So it's kind of weird, like that tells you, people are just holding money in banks and banks are fractionalizing that and putting it somewhere else. So why is that? Because it should be higher. If compared to like Kazakhstan, it's like 40%, just this high number. The US is the same too. It's like 1.5%. But more importantly, like, it's hard to use them in today's world as a building block for other assets. So like, it's hard to build things off of CETES. So if you're like a fintech company today, you're usually getting your yield from like credit or lending or something like that. Where if you had more accessible, highly liquid government debt, that would make it safer and more available. But right now, government debt either has lock-in periods or it has market hours. And so the blockchain really unlocks it for us. We've been able to do interesting things. And I actually think it's the only thing that will save non-US or non-EU countries from being overrun by foreign currencies. So as an example, if you look at stablecoins today, which are a huge improvement over remittances, it is 99.5%, 99.95%, some crazy big number in US dollar denominated. So where does Mexico fit in there? How does Mexico fight against this? How does, in the future, a Mexican go to the store and buy a soda without having to FX into USDT and then FX out to make the payment, which is a huge burden, and we view it's through the tokenization of sovereign debt. It's keeping that currency in their denomination, not needing to FX to use stable coins, and doing it in a way that is beneficial for that country. So I don't know if I solved your problem or if I exactly answered, but what's broken is it's just not able to evolve because there's layers and layers of bureaucracy upon how we use financial systems today. And there's a need to evolve to meet the rate of like the US and Europe and other countries.
Understood. And you did. I think the problem is clear and the solution is clear as well. So the TradFi approach to government bonds and debt is it's not. I wouldn't say broken per se, but it could be better, right?
Yeah, exactly. Like Aceites Directo is awesome. It works pretty good. I don't know because I can't have an account. I've tried. Soon, I might have enough of I'd say. Right now, I'm a permanent. I'm a resident, but I'm not a citizen. But can you sell prematurely debt? Like if you bought like a 10-year Aceites, could you sell it 2 years into it on Aceites Directo? And this is a question to you, Isaac. Do you know that answer?
Yeah. I don't have. I honestly don't have the answer yet. But the way I'd approach the question is, why shouldn't I be able to do that? Like it's an asset.
Exactly.
It should have a secondary market available so that I could sell it, and the people that I'm selling it to should have the availability of buying either directly from the authority or the authority, or from other parties who are willing to sell. So it shouldn't be a problem.
That's what I think too. I've heard that you can't. I've heard you're locked in, but I've also, someone's tried to correct me. I wish I could prove it myself. But that's the biggest difference with us is it's an open market. Secondary markets are okay. So as long as there's a market there, you can sell it and you can get rid of it. So say you bought a 10-year. We don't have 10 years, by the way, but you would not feel locked into that because there's a liquid market. And I think that's where the future should go, where and also like as a U.S. person, if I want to buy Mexican treasuries, it's almost impossible for me within reason unless I buy them from like an ETF in the U.S. and then yields are super low compared to what they are offered. So that is really easy to do through the blockchain. Yields are almost 100%, and it's accessible globally.
Got it. So, Dave, there are a couple of questions coming in. The first is from Angel Junco, who's asking, aside from its role as a stable investment vehicle, what practical real-world applications do you envision for the MXNE stablecoin? So you sort of hinted at a response, but what do you think?
For MXNE, which is what I would call a stable coin and not a stable bond, or we call it a sovereign coin. It's the same thing. It's just a way to say it's collateralized by our assets. It's a U.S. regulated stablecoin, and so anyone in the U.S. can buy it and work with it. So remittance flows start in the U.S. and they go to Mexico. It is significantly cheaper to send money from the U.S. to Mexico through MXNE than anything else in the world. So if you want to swap USDC, so you want to onboard in the US from Coinbase. So MXNE is in Coinbase right now. If you want to onboard through USDC, that's free for you to do. And if you want to swap it for MXNE, as long as the depth is like 2 million or greater, it costs you less than 5 bips. So contrast that with how things used to be, where if I was like say an immigrant in the United States, I would go into MoneyGram and they charge me 700 bips. So which I think should be illegal, and there's laws against it now, but it is 100x cheaper to use MXNE from the US to send money home. And there's also our great friends Bitso, they did MXNB for this reason. It is a payments token, it's highly liquid, and you can use it to send money home. That's the biggest, like 90%. Now people on base trade it speculatively. So anytime like Trump and Claudio will get in an argument, right? And they say, hey, tariffs are coming, the currency fluctuates quite a bit. And
Yeah.
so there's a lot of speculative trading happening on base for that right now.
Got it. Got it. Interesting. So moving on, Dave. I think at its bare bones, or at the very basic, what you guys are building faces challenges very similar to those challenges that Tether and Circle faced when they were starting to issue their assets, like USDC and that sort of thing. And I'd like to focus on one particular challenge, which was reserves and demonstrating how they managed and managed their reserves. So, from that approach, how do you guys take on reserves and custody of bonds, which is the assets that you are like the underlying assets? How do
Yeah.
you approach that?
I'd love to just show you. I don't know if you could share your screen or I could mine. Maybe that's not worth doing. But if you go to app.etherfuse.com,
Yeah.
this is the strongest thing that we do. Because so I want to show you. We actually publicly post our reserves continually, show you where they're at, and we have a third party that attests to every token that's been issued monthly.
All right. So
So
it's at etherfuse.com, right?
yeah, and then click on CETES.
Okay. Let me just do it here. It
Yeah.
should be visible for
So
everyone. So
go to bond details and scroll down. So this tells you the price and the supply, but scroll down more. Okay, so that top link right there, proof of reserves. This is a global auditing agency that has access to all of our accounts. And every month, they don't tell us when, but they go through and audit all of our reserves and they look at the tokens that have been issued. And then they attest to the ratio that is collateralized. And if we fail, we get in trouble. So
yeah.
basically, if it's less than 100%, they let everybody know. And so we have a history of this. So you could go into, you don't have to right now, but information, you can see our history. Now, additionally, if you scroll down more, we actually tell you where our reserves are. You probably are familiar with these institutions.
Yeah.
So for CETES, we hold reserves in BBVA, Actinver, and Cuspe. Mostly in the other two, but we give you all the details. So all these are regulated financial institutions that enable us to hold assets on behalf of our customers who are token holders.
All right, really interesting. So, the bonds are being held at these regulated entities, and once like people that have, for those of us that may have a token representing one of these bonds, they have what the right to claim from Etherfuse, the nominal value, the from Etherfuse, and Etherfuse will. Uh,
Exactly. There's probably a more legal way to say this because I think there's a very legal nuance here. So, uh, so the correct way to say this could come from our lawyer, but the holder has a right to the assets in custody and can claim those. Additionally, in the event, there's this concept that's really important when you work with somebody of bankruptcy remoteness, saying in the event that something went wrong with Etherfuse, you still maintain a right to those assets before any creditor has a claim to it. And a token holder does have that. So these assets are what are called bankruptcy remote, according to Mexican law and Swiss law too.
All right, that's interesting. Interesting. So, Dave, you mentioned before your way of approaching the authority, the CNBV, by way or through the mechanisms or the lanes that are provided by the fintech law. And you sort of mentioned your the complex experience that you had when dealing with the authority, right?
Yeah.
So based on that, how would you describe Mexico from a regulatory standpoint? Is it a crypto friend or a foe?
That's tough. 4 years ago, I'd say it's easier. Uh, The biggest problem with Mexico is the lack of clear clarity. Like it is even somewhat frustrating that we don't have a positive ruling. We just have a this isn't regulated by us ruling, and follow up inquiries which say this means this means that, where we're comfortable enough to do it. So 4 years ago, it was way better than the U.S., which wasn't even. And I can only compare it to where I live. Where if we would have tried to do what we do in the US, we would have been sued, you know? Where we went to Mexico and they begrudgingly let us do it, if that makes sense. So I would say it's somewhere in the middle. Now that the rest of the world is moving so quickly, I really hope that Mexico sees the existential crisis that is involved here by not competing. So they really do need to create some clarity here because I mean, just take the relationship with the U.S. The U.S. isn't necessarily thinking in Mexico's best interest ever, and in the past they've shown that they have thought counter to Mexico's interests. So if you think about the tequila crisis, which is like 80 years ago, or no, sorry, not that long, 40 years ago, the outcome, the reason it happened is because the US dollar was highly coupled with the Mexican peso. And so when you have any sort of adverse event where they're being compared, it spirals out of control. So right now that's happening again because the Mexican economy, which is highly reliant upon remittances, is incentivizing people to hold dollars instead of pesos. So if Mexico becomes highly reliant on the dollar again, they lose their sovereignty, they lose their ability to make decisions. And like at the end of the tequila crisis, basically had to be bailed out by the US, who isn't thinking in their best interest. So I hope Mexico becomes more friendly because it's important for the beautiful country that you guys have to be self-sustaining and to maintain your sovereignty and to be able to engage in commerce in your currency that has all the benefits of stablecoins. Like I would hope we see kind of like a renaissance of patriotism in Mexico where they want to operate in pesos-based assets. So yeah, Jorge, you're not alone. We're all frustrated with regulations. The problem is someone has to take accountability for making the decision. And we were lucky enough that I really like our lawyer. He's kind of a bulldog in some cases where people know he's not going to give up. He may be a little bit stubborn in some cases. So when we kept going back to the CMBV, we really forced them to say something to us, and that's his. We owe that to him, to his personality and brand. I think they knew. I think they had some history with him in the. I talked to another regulator. I said, "I know who he is." Like it's just he'll force the point. So they knew that we needed something to continue. So that was great.
That's sort of the problem. Like in the context that we're currently in, everyone in the crypto industry needs to force a response from the authority because they're not giving one. They're not. The fintech law is really not up to date. It's not. It doesn't mirror the fintech ecosystem right now, and we need to force responses out of them. So
it's crazy if you think about it. There's no one has been accepted into the sandbox ever. So it's like what's.
It's a problem of design of the sandbox regulation. Like I remember when we try to do something similar based on blockchain. We approached the authority and we said, where's the innovation? The innovation is on the transparency, security, speed, and whatever else that blockchain has. And the response was amazing. They told us, yeah, but blockchain is a technology from 10 years ago. So it's not very new.
So yeah, they did give us insight to let us know that we could keep pushing. Like when we first started, this was one thing that was cool. We went to a meeting, like the first meeting, and everybody was there. Like everyone important was there, and they told us kind of in person, not in writing, like, we don't think that this is a security. So we did have confidence that we keep pushing, that we'll get some outcome that we could work with. So that was nice. but I agree with you. It's to their own detriment. Like, remittances should be like, if you look at MiCA in Europe, they force a tariff on non-European stablecoins, and that's so that they don't become overwhelmed with a foreign currency, right?
Yeah.
Mexico should have something like that, and I say that as a gringo. It's not good for the world to be so subject to one country, and Mexico should be competing here. We hope to see more things, and I hope people, when they think about CETES on chain, that they feel somewhat patriotic duty to use them. We try to not charge fees and try to make it cheap, but we really hope that it provides a way for you to on-ramp for free onto the blockchain, for you to have a store of value that is comparable to the dollar, and for you to engage in commerce in Mexico using stablecoin technology.
Agree. So fortunately, something will happen, hopefully soon. Dave, we're approaching the end of our session. I have one last question and a couple of what we call rapid fire questions. And just take the opportunity to invite people that are with us to pose their questions. So because Dave is here, so we should profit from that. So my last question is based on what's currently happening with, for example, USDC and USDT, and more particularly with Circle and Tether, who are currently the biggest holders of sovereign debt in the US. So even their holdings in T-bills or sovereign debt in the US is even higher than the one that many countries have. So it's interesting to see stablecoin issuers as the biggest holders of sovereign debt. So I want to ask you, what's your take on this? Do you see this as an opportunity or sort of a risk for Etherfuse?
No, it's definitely an opportunity for Etherfuse. I hope to be one of the biggest holders of Mexican sovereign debt here pretty soon. It's kind of indicative of success. It may be a risk for a country to be so indebted to a single person. Like from a U.S. perspective, it can be a risk that China holds a significant amount of U.S. debt and what they do with that and how they dump it. So I do think a country needs to provide guardrails to protect against stuff like that. But it is mostly a benefit. So a country's main revenue stream is its debt and how they improve their country and how they grow their country, how they invest in their country. So new avenues of investment is good for both parties. And I'm happy that the U.S. has become so positive as far as getting ahead of it. And I hope the rest of the world turns around and sees it too. So our goal would be to create an asset that has so much utility and so much usefulness that we are one of the major holders of Mexican debt. I'm very bullish on Mexico. I think that its economy is unique in the fact that there are a lot of countries who could trade with Mexico. You have strong ecosystems, smart people, great food. It's just the perfect place, in my opinion. So happy to be a part of its growth if we can.
Happy to have you here, Dave. It's great to see solutions and proposals such as yours in our ecosystem. So just let's to start wrapping things up. We have 3 rapid fire questions. So just provide a response as brief as you can to these very general questions. The first would be, what past experience taught you the biggest lesson you now know and apply to avoid common fintech or crypto pitfalls?
Past experiences. The biggest is so for common fintech pitfall startups is sometimes we think this big partner will make our company. More often than not, that big partner will sink your company in some way. So like if you as a small fintech are like, hey, I want to partner with Santander or something like that. in general, it's probably a waste of time, meaning they take so long or they move so slow or they have so much leverage over you. Uh, and this may not be the question you're asking specifically, but really focus on the community and growing from the ground up because it scales quick.
Got it. Got it. What risk keeps you or Etherfuse up at night?
It used to be, I would say, regulation, but that's changing. Right now, I would say it is industry with a lot of big companies with a lot of money competing directly with us. So that's tough. The
That's
second that the second that the bank number one wants to move quick, it's a hard that's hard to compete with.
definitely, definitely. And our last question: what do you wish regulators understood better?
I wish that they understood the cost of lack of direction. So at the rate stablecoins are growing, let's talk about Mexico specifically. At the rate stablecoins are growing, most of the rails of the future will be built on a foreign currency. So by moving slowly, they are pretty much making it impossible for them to have a claim of the future rails of the future. If you look at like Swift, America holds a lot of leverage over a lot of people by owning these rails. So, and I like my country, so I'm not trying to be negative about it, but let's just think of one scenario. Trump has said we're going to tax remittances. Mexico has no control over that if remittances happen through Swift. Now, if remittance happen in DeFi and we're using pools of USDC and CETES, that's not taxable by a sovereign foreign country. Yeah. So I wish they saw the future and saw the opportunity and saw the risks of no action.
Yeah, a 360 approach to to this type of thing, like understanding the risks, understanding the opportunities, and understanding what's between, right?
Yeah.
So we got a couple of questions. Our last questions here. One is from Arturo. What's next for Etherfuse?
Arturo was our lawyer at the time, so he's great. Hi, Arturo. We are onboarding other currencies. So our goal was never to be super focused in one place, but it is. So we're onboarding, I would say, the top 40 currencies in Q4. So India, China, Canada, and we have stable bonds for each of those. So adding more things. I'd say secondary is for us to really demonstrate in Mexico that it's the best way to onboard to the blockchain. So we have free rails you can issue not to win this space, but become a player in this space, to show people that holding treasuries with us is cheaper, higher yields. So really spending a lot of time in Mexico this next year, but adding other currencies. And we feel like if we can demonstrate value in Mexico, we can then move on to the rest of the world. And Arturo, thanks for all your help. I think I need to change his picture because he moved on, but he's still on our website.
Great. And our last question comes from Angel. He's asking, what is your strategy to onboard everyday users who are not familiar with crypto wallets or blockchain tech?
Yeah, this is tough. It's tough because when you have to tell someone how to download a wallet, you've already created friction. So I think our first strategy is to just focus on small startups first who have experience and then move on to retail more. But it's very hard. So I don't really have a good strategy of not people who aren't familiar. So I think our first strategy is to find people who are already familiar. We think those are startups like Series A, Series B, new seed round. We'll focus on them and have them kind of learn how to hold their assets or their treasuries with us.
Yeah, the B2B to C strategy is always a good strategy. Interesting.
Exactly. Now, as the world catches up, we'll have wallets, we'll have things that become more familiar, and I think that's our opportunity to engage with them.
Great. So, Dave, thanks for the time. Thanks for everyone that joined. Just remind everyone that if they're interested in learning more about Etherfuse, you can do that by scanning that QR code. If you're interested in contacting us a little later too, you can use that other QR code. And Dave, is there something you want to wrap things up with?
I would just say, if you have any questions, reach out to me. We're pretty accessible. I'm Etherfuse Dave on Twitter, and we'll be at the Bitso's stablecoin event, which everyone seems to be going to in 2 weeks. So come say hi and reach out at trying to think of it. Yeah, on our website or on Telegram or Dave at Etherfuse, and we'll help get you started. Yeah,
Great.
Chairman of CB.
Yeah,
I'll try. I think I need to improve my Spanish to do that, but I'll try, Jorge.
Yeah, but as Jorge is saying, David hermano, ya eres mexicano. So
Awesome.
Thanks, David. Thanks for the time. I'll take your word on inviting you in 1 year to see the Etherfuse progress and also your Spanish progress as
Spanish.
well.
All right, I'll try. Thank you. All right,
Thanks.
have a good one.
Thanks for the time, David,
Bye.
and thanks for everyone that joined. We'll see each other next week. And thanks everyone for joining. So thank you, Dave.
Thank you.